What's up? What's up? Happy Friday. Happy Friday. We haven't done an Ask the Trader video in a couple of weeks. Uh, but we have a special guest today. We have Mr. Noble Woods. I'll bring him on later. But the topic of today is, why are you letting the fear of losing in the stock market cause you generational wealth? So we're all educated. Most of my peer group, we have high school diplomas, we have degrees in college. Most of you guys are PhD, doctorates. But when I talk to these different individuals, most of you don't have stock. And I get it. I mean, right now, if you go on the internet right now or on Facebook, everybody and their mama wants to teach you about the stock market, and it's becoming very saturated. And there's a couple of individuals like me and Noble that's been around for 10 years that actually buy stock. We're in the futures market. We buy crypto, cannabis stocks. So, there's a lot of people that are educating, but there aren't enough people that are actually doing it that you guys can listen to. So my cousin and friend Noble Woods created this class called Limitless, because I get a lot of questions all the time. If I want to get into the stock market, like, where do I go? How do I start? How much money do I need? And when do you sell? If you get into a stock and it makes a lot of money, when do you sell it? And if it goes down, how long do you hold it? And there's so many different questions, and there aren't too many books out there that can answer all of these different questions. We both created a room 10 years ago called Insider Trading that most of you guys are in. And you get to rub elbows with real traders and talk about real investments. And that's why we love that particular community. So I'm going to bring on Mr. Noble Woods and let him talk about his event that's going on this weekend in Atlanta. If you're in Atlanta this particular weekend, you may want to come out, just to rub, like I said, rub elbows with the community. That's what we're here for. We're here so that we can share our knowledge. We can
Let me add the link real quick.
You want to add? Okay, he's going to go ahead and add the link, but I'm going to bring him on. You coming?
You want me to add the link?
Don't worry about it. I'll do it. And with further ado, we have Mr. Noble Woods.
Switching chairs. Oh, technical difficulties. Yo, what's up, guys? I'm dressed in all red, and the hat is very symbolic. It's red, but it's a bull. Are you bullish right now? With everything being red, everything crashing, coming down. The event tomorrow is going to be from 2 to 5. I've done this event, man. I've had an amazing last 18 months teaching people. I've had people bring their 12, 11-year-old nieces, nephews out. I even have one lady. She's a lawyer up in Detroit. She came with her 11, I think 12-year-old niece. Signed up for the class, the actual online class, and they're going through it together. Think about that. She's probably in her mid-40s, and she's literally learning about investing with her niece, going through my class, right? So I love what I do, man. As Joel said, Joel was trading before me, right? So I got into this about 10 years ago, fell in love with the futures market. Nothing else made sense to me. I'm like, if I can make money in the futures market, when I started off, I think that very first trade was just critical. I made like $675. I tell this story all the time in my seminars. I made like $675 in like 5 minutes trading silver futures at 3 a.m. And I'm working my 6-figure corporate job and going through all that stress and just trying to find a better way, something that's more meaningful to life to me. Met this guy, man, just learned a hell of a lot in a short amount of time and just acted on it. So my event tomorrow, man, I specialize in keeping it fun, keeping this stuff practical. Even if you've been to any events, I would even encourage you to come out to this one because this one's going to be a little bit different. I'm adding some new components. One of the biggest things, I'm just looking at what's in here. One of the biggest things is last year, starting in October, the market started slowly coming down and coming down pretty hard. Now, How you view the story, though, depends on how much you know. Because the truth is, since the lows of the recession, the market has virtually been going up and hitting new highs year after year for about 10 years. So if you're just kind of dialing in, you're just kind of paying attention, and one, I think you should question, like, why am I really just now paying attention, right? Because literally, the market has been doing nothing but making higher highs and higher highs. The last 10 years have been a really easy time to be an investor. We even found some data that essentially shows the biggest gains basically come right after the biggest losses. So the 10, 15-year period after the Great Depression, after recessions, are when we have bullish markets, and bullish markets are just times when people are buying. People are reinvesting. They're getting back wealth that they may have lost. They're putting their faith back in those companies, right? And so whether you've never invested, whether you have a 401k and know a little bit, or even if you're a little bit experienced, I would definitely encourage you to come out to the event tomorrow. I'm going to post the link for it. And the actual title for this event is How to Make Cash When Markets Crash. So I'll be hitting a lot of basics. We're going to talk about how the market flows, and I'll explore and explain to you the difference between like the stock market, futures market. Like what's the difference? Why can you make so much money so much faster or lose it so much faster in the more advanced markets, right? Really basics. It's just based on math and how we created this, like what I always call it, this live video game. Like the stock market is the best video game we've ever created. And I call it video game not because it's something to play with, but because the way that it works functions in those ways just because we designed it to work that way. So let's go old school. Think about old school Mario Brothers. Why? Why do you old school Mario? You could be little Mario, eat a mushroom and turn into big Mario. That makes no logical sense at all, right? Why does that happen? Because that's how they designed the game to work. So you can make a lot more money with futures, foreign exchange, options than you can just by buying one stock, right? So we'll talk about that. The bigger kind of component of the day is really to talk about what happens when markets crash. October is historically like the biggest down month every year. You just probably shouldn't even expect really to make money. And these are based on historical patterns, right? So October, November, December, January, we're starting to bounce. Certain companies are already bouncing and making some really strong returns. There's a way to make money when prices drop as well as make money when prices go up. It's really that simple. I want to take that concept. It's called shorting a stock. I want to explain it to you in probably the most creative explanation you probably are going to hear. And I'll be honest, when I first started learning about trading, it took me like 3 months to understand, like, why can you make money when prices drop? I never knew that. It blew me away once it stuck. And it's very real. You can literally make money in both directions. So I tell people all the time, becoming a more educated investor and just really knowing that you can make money when things go up and when things go down. If you think about it, it makes it kind of where you really could care less. I don't want to say you could care less if we have a bad economy, but it's not going to limit you from making money. Wealthy people know how to make money in good economies and in bad economies alike. So we're going to have some fun. We're going to give away some prizes. We're going to play some games. I've tried to make this event over the last 18 months. Every single one I've tweaked a little bit, just trying to make it more creative and more fun and a really good experience. So that's about it. I will post the link to the event. It's going to be tomorrow from 2 to 5. My team is ready. I'm ready. I got to get a haircut. Y'all see I'm kind of woofing it. I got to get a haircut, but I'll be ready, man. We're going to have some fun. Joe's going to be there, so come through. Y'all can, meet me and Joe one-on-one, and that's about it, man. Joe's going to add some more commentary, to the topic, but these times in the market are not for you to be afraid when you see things coming down. And I'll leave with this. If you went to your favorite store, think about your favorite store. I love Zara. I like Zara. I do. I like Nordstrom's too. I'm thinking about clothes, right? So when I go to Perimeter Mall, I'm here in Atlanta. I go to Perimeter. If I walked into Zara and Nordstrom's and walking in, they said, "Hey, everything's 70% off." Oh man, we having such a bad time. Oh, everything's 70% off, brother. I'm going to be excited because I realize that low prices mean it's time to buy. So for some reason with the stock market, when things are bad, And we listen to people on TV telling us, hey, well, my portfolio took a hit. You got to think about it. Even when people say my portfolio took a hit, all they're saying is the money that they actually have investing is just kind of coming down, but they're invested. And so millions of people watch people who are making money worry about not making as much when we don't even sometimes have money invested in the market. And so I think by getting you these basics, you'd be amazed at how fast you can transform from a consumer who knows nothing about the markets to really being educated and being knowledgeable and confident, because that's really all it's about. You got to do. Investing is about decisions. That's actually how I'm going to start the presentation off tomorrow. Just talking about investing. We invest every day. Every word you say to people, every food you eat. If you worked out today, that's an investment. If you think by not making a decision, you're not making a decision, you're fooled. By not intentionally learning how to invest, you're kind of deciding to struggle financially more than you need to. I don't want to say you're deciding to be broke, but there's this balance to our decisions, right? So we're going to go a little deep because I'm going to get y'all serious tomorrow, but we're going to have a lot of fun, man. We always do. Like I said, if you have kids that are 12 and up, feel free to bring them. I literally can teach MBAs, working professionals, doctors, lawyers, middle school kids, high school kids, all in the same room. That's how simple and fun I try to keep all of this information. So I will post the link. Miss Nation, yeah, I know you coming. I see you. Yeah, so that's about it. I'm going to hand it back over to Joel, and I'll probably chime in here or there, or you just might hear my voice in the background yelling out something. So appreciate y'all. Hope to see you tomorrow. It's from 2 to 5. I'm about to post the link in just a second.
All right. You guys need to get excited about the stock market. I mean, if you talk to me for 5 minutes, you will see how excited I get about the market. Investing is a lifestyle. Buying stock is a lifestyle. And it's funny to me because most of my peer group, like, we know nothing about it. Everybody, my goal is that everybody is involved in the stock market. Why? Well, first of all, if you live here in America, and I know there are a lot of people outside of the country also watches these podcasts, in order for you to grow with America, you have to take advantage of what America has to offer to you. Living that American dream is a real thing. You guys got to understand, most of the businesses, the Fortune 500 companies, the biggest companies here in the world are here in America. And most of you guys are not getting your piece. I've been doing this for 10 years and I haven't gotten a red cent from anybody I've done a couple of consultations here and there, but I do this and you hear the passion from me because I love it when I see other people making money in the market with me. I don't want to make all the money by myself. I don't want to talk about cannabis stocks and cryptocurrency and Apple and Netflix and Facebook by myself. I earn Netflix made a 50% return in the last 30 days. Most of y'all don't even know that. We laugh, we talk about Netflix and chill and it's all fun and games until you look at your bank account and you're like, man, I could have owned that stock and I could have paid for the fees for the whole year. And that's how I want you guys to start looking at the market. I usually buy Apple before Christmas time. Why? Because if I want to buy an Apple product like a MacBook or a Apple iPhone, I don't use my regular mind anymore. I use my investing mind. And I say to myself, you know what? Apple is going to make a whole bunch of money in December. So if Apple's going to make a whole bunch of money in December, I need to be buying it in September, not because I want the stock to go up, but because my money is invested in Apple. By Apple appreciating in value, I literally get a free MacBook or a free iPad or a free. And like I said, it's funny to me because I kind of flip the game. I feel like as an investor, you become the bank. And most of you guys don't think like you're the bank. And my job is to change you guys' mindset about investing. The bank and the house always win. When you go out to Las Vegas and you're playing blackjack or you're playing roulette, you always hear that. The house always win. Well, you gotta make it where you're the house. And in order for you to be the house, you have to have cash. Cash is always king. we get, we go out, we get loans on cars, we get loans on the houses that we buy, and we feel like we've made it. But we've literally just put ourselves in debt. And I know that's a cliche and y'all are tired of hearing it, getting out of the rat race, but it's real. It's really real. And a lot of you guys are in denial. And my job is to get you guys out of denial. Everybody here wants to be a millionaire, and everybody here is capable of being a millionaire. But you can't be a millionaire if you don't have money sitting in an investment. You see what I'm saying? If you want to save $50,000 a year for 20 years, you'll have your million. But I guarantee you guys, in 20 years, $1 million is not going to mean anything. It really isn't. $1 million is going to be the norm to have. We don't get it because it doesn't make sense. But all you got to do is go back and look at history. Go back 20 years and look at how much stuff costs. Remember how much a brand new Honda Accord was? I remember it to this day. Me and my mom were walking into the Honda dealership, and she had the choice to get a Honda Accord brand new or a Nissan 200SX. There was $1,000 difference. The brand new Honda Accord was $8,500. The 200SX was like $7,900. This is within my lifetime. Now how much does a brand new Honda Accord cost? Almost $40,000. I remember a $40,000 car was like a Corvette or some type of exotic car. Same thing with real estate. So even retirement, a lot of our parents have retired already. If you had told them 20 or 30 years ago that when they retired, they were going to have $200,000 to retire with in their 401k, they would have been turning backflips. But now when they retire and they get that $200,000 that came from their 401k over the last 20 or 30 years, they run through that in 2 years. Why? Because they were already almost making $100,000, and they didn't do the math. They didn't make the numbers work to their advantage. And my job is to get you guys out of denial and start looking at the numbers. All right. The quickest way to making $1 million is not saving $50,000 a year for 20 years. That's the basic normal average way of looking at things. 1 + 1 is equal to 2. 2 + 2 is equal to 4. That's the tortoise race. If you guys want to get to $1 million fast, first of all, you got to learn how to get into investments that earn at least 100% return in a 12 or 18 month period. And it's not a secret. I'm talking about if you go, and you guys got to start learning how to look at charts. And that's why this is why my cousin Noble created this class, because once he came out of the matrix and he started to understand numbers, he was like, yo, why don't everybody know about this? Like simple stocks that you see every day: Apple, Netflix, Facebook, Twitter, Square, PayPal, MasterCard, all of these different companies, Amazon, all of these different companies that you guys know about. And I understand it, $300 to commit to Netflix is a lot of money for most people. It really is. Fractional. But there's fractional apps now where you can buy fractional shares of a company. And what happens is I think one is like Stash. We don't really like to give out names of different companies because we want to get endorsements in the future. But Stash is one where if you can't afford Amazon, which is $1,800 a share, you can commit $100. And then what ends up happening is if Amazon is up 10% or 20% that day, your investment is up 10 or 20%. And start small. I started small. I started with $50 every 2 weeks because that's all I could afford. $50 every 2 weeks starts to add up. 10 years blew by really, really fast. My sons have 5-figure accounts because I put $50 away every 2 weeks for 10 years. And at first it didn't seem like much, but as you know it, we have a cheat sheet. The market is going to be higher in the next 5 or 10 years. Period. If you go back and you look at history and you guys learn how to read charts, you're going to see that you have a cheat sheet. You know that the market's going to be higher in the future. So if you know the market's going to be higher in the future, you can't be afraid of the investments that you make today. You just can't. Are stocks going to go down? Can you buy something like Netflix that's $350 and then 3 months from now it's $175? Of course. But the way that most of us think is if Netflix drops from 375 to 175, we're so afraid of it dropping, and we have to tell our peer group that our stock is down 50%, that you miss out on the next 400% that it goes up. And that's our mindset. And the stock market is the only investment class that we do this in. For example, let's say you had $1 million, right? And I'm going to use real estate because most of us understand real estate. All right. You have $1 million. You want to go into an area that you know is about to become gentrified. All right. So let's say the houses in that area are going for $100,000 each, but you have $1 million. All right. So you buy your first house for $100,000, right? And you start renovating it because you know in 10 or 15 years, they're going to bring commercial buildings there. They're going to bring schools. And you know in 5, 10, 15 years, that $100,000 investment is going to be worth a lot of money. All right. So let's say you are renovating your property and then in 3 months' time, you see the house next door go up for sale for $50,000. And it's the same exact house as yours. Now, I know realistically that if that house is going for $50,000, that meant that your investment went down from 100 to 50. But because you know that it's a great investment, what are you going to do? You're like, hold up, I got $1 million. I just bought one for 100. You're not going to care about buying another one for 50 because you're going to say that's a great deal because in 5, 6, 7 years, I'm getting this property cheaper and I know that it's going to be higher in the future. You guys do not do that in the stock market. The stocks just in the past 6 months dropped. Every stock that you can name dropped 30 to 40 to 50%. Me and Noble are the only ones I see in the room buying up everything because we're like, oh my God, Amazon is down 30 or 40%. I'm not going to sell this stock for another 5 or 10 years because we look at stocks like we look at real estate. If I was happy at Amazon when it was $2,000, if it's $1,300, I'm ecstatic. And I don't really care if it goes to $100 because I know, because I have a cheat sheet, that Amazon is going to be higher in the next 5 or 10 years. Now, the first couple of years that I invested in the market, I'm going to be honest with you, I didn't believe in it because it takes a little while for things to turn around and go back up. To try to understand how it works, the stock market is literally the real estate market on a shorter time frame. It's like the Indy 500. All right. So it's just faster. It's way faster. It's about 10 times faster. So the way that you guys saw real estate drop, you remember when real estate dropped and the house that you lived in or bought was like 70 or 80% less, and none of us bought it when it was 80% down. And then when it started to turn around, most of us were like, hold up, this market looks like it's stabilizing and it's going to come back. And then what ended up happening in the last year? When prices got right around the price that we bought 10 years ago, a real estate flurry just happened this past year. And the real estate market started to go up again. But what you should have been doing was buying it when it was low. This is how you guys need to treat the stock market. And because you know that inflation is going to occur, because you know that the greatest businesses in the world are here in America and they're not going to do nothing but get bigger, how can you guys not want to invest in the greatest minds in the country? It baffles me to no end. I talk to a lot of people because, look, I do a lot of consultations. So I have the right to say you people and this person and that person. I was also a real estate agent. So as a real estate agent, my job was to go over your whole financial record to see if you can afford that house. So I saw what you were invested in. I saw how liquid you were. And I knew what the banks were looking for in order for you to invest. And let me tell you, the high wealth individuals, that were able to get loans freely and were able to get multiple properties were the people that you didn't even expect. You know, they drove the Honda Accord or the Camry and it was paid off. The house that they lived in was paid off. The only real estate that the only loans that they really had was the house that they lived in. All right. And most of the time, the house that they lived in was already halfway paid off. And they could use a line of credit off the house to go buy other investments. I saw people taking lines of credit off their house and buying stocks because they knew that, hey, I can take out a loan for 10, 15, $20,000. I know if I put that in Netflix and Netflix goes up 100% in 3 years, that's going to make more money than my real estate. But most people that I talk to don't really understand the market that way. Me and Noble were having a conversation the other day where our goal is to have your children be the breadwinners of your home. Like that's a real thing that we want, because if you have kids are a lot more fearless than we are. It's almost like I hate teaching adults how to swim because 9 out of 10 of them are not going to get it because they've been conditioned to have a fear of the water, and there's nothing you can really do to get them outside of that. Kids that learn the market and learn how to invest early, they have no fear. They know that the market's going to go up and down, but they know that they're not going to sell their stock for 30 or 40 years. So they have no fear when it comes to investing. And that's why we love to teach them, because it's funny, we would go to different conferences and we would talk to different individuals and we would get so many objections from adults. And, you know, adults think they know everything about everything, but we know nothing about numbers. Like numbers don't lie. You know, English, the English language type stuff, you know, linguistic type stuff, you know, it can be subjective, you know, but numbers don't lie. And most of you guys do not look at the numbers, and you are in denial when it comes to the numbers. You have to look at the numbers to know where you want to go. And that's kind of how I consult. I sit down with somebody and I say, all right, this is how I look at it. I say, all right, you have a great job. You make $250,000 a year. All right, how much money do you have that you can save every month? You know what they say? I don't have any money to save. And I'm like, you make you make $20,000 a month, and you mean to tell me you don't have $50 or $100? And that's the mindset that 99% of you guys have, because you feel like, oh, I have this high income, so I don't need to invest because my income can support what's going on right now. And I'm going to tell you what ends up happening. You work. You don't put any money aside. You rely on your 401k to be your retirement plan and your real estate. And I'm going to tell you how it goes, because I've seen it played out so many freaking times. You make $250 a year. You're putting away good money because your employer is matching your contribution. So let's say you put away $30,000 a year in your 401k and you're averaging maybe 10% a year. All right. On average, let's say you want to work for the next 10 or 15 years. Okay, you might have $500,000 in about 10 years. All right. Now think about it. You were making $250,000 a year, but when you retired in 10 or 15 years, you only had $500K. Now, $500K is more than what your salary is for that year. But I promise you guys, if you are accustomed to living a certain way, you're going to want to continue to live that certain way. And what that individual should have been doing was putting away money in something that can earn 100% return. Because look, the quickest way to $1 million is flipping your money 11 times if you start with $500. That's why I always tell people, like, $1 million is not that hard to do. You just got to be able to earn 100% return on some investment in a certain amount of time. Sometimes it may take you 12 months to do it. All right. Making a 10% return a month, just doing what we do, is so, like, we make 5 or 10% a day sometimes. All right. So making 10% in that month, literally in the next 10 years, you can take 500 and flip it to $1 million And you don't have to buy penny stocks. You don't have to buy Bitcoin. You can buy stuff like Amazon or Square or PayPal and let it do all the work. And during that time, you're also putting away money. So if you started off with 500 and you're putting away another 100 every month, you see what you're doing? Every time you buy a stock, you're creating a bank. You're becoming the house. All right. And every time you become the house, you increase your equity worth. So you shouldn't really be worried about it going down unless you're retiring in the next year or two. If you're not retiring for another 10 or 15 years, there's no reason why you guys shouldn't be buying. Look, I buy stuff religiously every 2 weeks. And I get all of these, everybody, and I love it. People will come to me. I call myself, I'm what would Joel do? And I've earned that title not because I was so great at picking stock and knew exactly what to pick. It was because every 2 weeks I invested in myself. That consistency. That's what makes me a great investor. Has nothing to do with my stock picks because every stock is going to be higher in 10 years. So I'm going to look like a genius to everybody. But how much of a genius do you have to be if you know that the market's going to be up in the next 10 years? We all can be geniuses. The hard part is putting away money every 2 weeks, every week, or if you get paid every month, taking and to make it even easier for you guys, take 10% of whatever you make and put it into something every time you get a paycheck. If you get a paycheck every 6 months, take 10% of that. If I know some people that invest with their tax returns, any tax return that they get, they'll take a part of it, go buy them a new shirt or pants or purse. They use the rest of it. They invest in the market. They invest one time every year, which is cool. They invested over a couple of stocks, and that's their investment plan. It's 1:30. All right, so we're gonna have to get on out of here because I can talk to you guys forever. But you see the excitement that comes from me. It comes because I love to make money in the market. I love to sit back 10 years from now and see something that I invested in. And I can look back and say, man, I'm glad I did that. I also don't want my kids coming to me and saying, Dad, you were on Facebook 7, 8 hours a day. I know you invested in the stock because you believed in it so much that I just know that you invested in it. Because in 30 years, can you guys imagine what the price of Facebook would be in 30 years? And for you to look your kid in the face and say, I didn't invest in it. And then they say, hold up, wasn't Facebook only $150 a share? You couldn't invest $150 into my future? That's what's going to happen. Your kids are going to look at you like, during this whole time where you was making this high income, why didn't you invest in these simple little investments that will pay off in the future, not only for you, but for your family? And what are you going to tell them? Well, I just didn't want to lose. I just didn't want to lose it all. Do you guys feel like Facebook is going to go away? The only reason why you should feel like your money is going to go to zero is if you feel like Facebook is not going to be around in the next 10 years. And if you feel that way, then buy companies like McDonald's or Chipotle or Nike but you learn about the market when you get into the market. Most of you guys don't know that you can buy Chinese stock. The Chinese economy is going through a real estate crisis like we did in 2008, 2009. People are creatures of habit. All right. We have patterns. And all we do is we go through that same pattern. So if we look at what they're going through right now and we look back and see how America came out of it, then that should tell you, man, I should be buying a whole bunch of Chinese stock. And all in other different asset classes too. Most of you guys want to buy everything when they're at the high. That's when you guys should be selling. You should be buying when everybody is crying. So I'm going to go ahead and get on out of here. It's Friday. I need to help this brother out. May the force be with you guys in your trading. We're coming from Decatur where it's greater. I need for you guys to come out to the Limitless event tomorrow. If you see me, throw 2 fingers in the air. Let me know that you out there. The link is on the post. And the link is on the post. And I am out. Peace. Share. Oh, Join Insider Trading. Join What Would Joel Do? There are different pages you can go to. Millionaire Challenge. If you're interested in taking an online class that my cousin created, go to Limitless Class on Facebook or Limitless. You can go to limitlessclass.com. So many different places that you guys can go to get educated. If you don't want to commit that type of capital, you can always go into the Insider Trading Room and ask questions. There's 2,500 traders in the room that can help you. And I am out. Peace.